Hello, this is Rajat Bose here. Welcome to my channel again. We are now going to discuss Nifty, Bank Nifty and two recommendations. This is our third edition of weekly market review and stock recommendations. We begin with the Nifty. The Nifty today closed at 18,334. It tested the 9-day moving average, 9-day exponential moving average, which is located exactly at 18,200 level. It was showing a bit of a weakness on the chart, and probably a taste of 9-day was very much on the cards, and that has happened. However, the fact that it has actually closed 134 points higher from the 9-day exponential moving average is definitely a heartening sign. And the weekly candle is a positive candle. So the bulls are still very much in the driver's seat. Of course, if 9-DEMA gets broken and thereafter the internal trend line, which is around 18,100 level, if that gets taken out, then it would be pretty weak. But I would like to point out one thing, that 17,990 to about 17,970, this is the most important support zone for the Nifty. Till such time that gets taken out, bulls are trying to take it up. Before they take it up, what you need to watch out for is the critical resistance level between, say, 480 to about 18,500 range. If 480, 18,500 range is taken out, then expect the bulls to actually make a fresh summit attempt. On the other hand, if by any chance during the coming week you find the Nifty falling below 17,970, then we would have to say rather that probably a correction has set in. But for now, things still look bullish so long as the 9-DEMA is not violated decisively. So carry on, bulls, and let's see how the bears match the bulls' firepower. Well, the Bank Nifty initially was showing some weakness, but finally it managed to close the day pretty well at 43,793.55. That is the close of the Bank Nifty on Friday. Now, what we see is that the Bank Nifty, there was a horn top. Horn top means first there will be a top that was at 43,739. Then we saw on Thursday a top that came at 43,774, and in between there had been 4 or 5 candles which did not cross these two peaks. This is called a horn top in candlestick parlance. The import of this is that it could be the harbinger of a downswing. But on Friday what we saw is that the Bank Nifty, the Bank bulls have adequately taken care of the situation and finally posted a higher high that is at 43,905. 43,905, that is only 250 points from the all-time high of 44,151. So, and it has closed at 43,793, roughly 43,800. So that means from the last close, the all-time peak is only 358 points away. So chances are the Bank Nifty might actually post a new high next week, or rather this coming week. So what we are noticing is that Bank Nifty has regained strength. Nifty was slightly hesitant, but if the Bank Nifty that has been leading the market, if that is gathering strength, we can envisage that even the Nifty would join in. Well, again, we are going to suggest two stocks in this coming week. Once again, I would like to remind you that I am not going to give the recommendation only for this week. This is not a short-term trade. This is not an intraday trade. This is a delivery-based positional trade for 3 to 6 months. My first stock is India Energy Exchange. India Energy Exchange, the code is IEX, and I'm putting a stop loss at 148.50. It has closed the week around 160. It was going up. On Friday there had been some selling, but you don't need to worry, because once you see the chart and some of the rationales, then you would understand that IEX is in for a big move. First thing is that the base building, the price movement base building has begun from October 2022, and this base building is now fully complete. The stock is above 9-day, 20-day, 50-day, 200-day exponential moving average. That means it has taken care of all these moving averages, and a big rounding bottom formation is in place. It is actually happening. It suggests that it has the potential to go beyond my last target of 199. Currently it is at 160. I am giving a stop loss of 148.50 and my final target is 199. But it can, if you are patient, if you are willing to give it time, it is going to go up to something like, there is every possibility that it might actually go up to 240 to about 250. That is for a 1 year period. I am actually saying yes, 240, 250 is possible, but it might take a year's time. But from 160 to 240, a 50% run for 1 year is a pretty good return. Now, one thing that I would like to highlight is that in the recent past, even the 14 RSI has posted a new peak. It is the new peak since December 2021. And this indicates that the momentum, despite the fact that on Friday there had been some amount of selling, the momentum is building up, the momentum is being sustained. I am talking about not short-term momentum, but intermediate and medium-term momentum. That is definitely developing. The record volume of 44.175 million shares on 6th of April, it shot up by 10.5%. That signaled that the downtrend is fully over and now it is going to go up. What you saw on Friday is just some profit taking, but that's a good opportunity that you are still getting the stock around 160. Buy this, buy IEX for at least 3 to 6 months, if not for a year, and your target will be 199, and then thereafter it could even go up to 240, 250 over a period of 1 year. Well, the second stock that I am going to recommend is, once again, I have chosen an insurance company, this time a general insurance company. ICICI GI, ICICI General Insurance Company. We have already recommended LIC, that is a life insurance company stock, and this time I have chosen a general insurance company. ICICI General Insurance, it is hovering around 11,025. I would suggest a stop loss at 1,094.80, roughly a 30-point stop loss. Mind you, the first target is 1140, then it would next target is 1160, 1168, and finally 1197. But again, here also I would say that it might not just stop at 1197, it can go further up. Now, what I am going to tell you is this. Once again, my methodology is fairly similar. This time I have used the 9-day exponential moving average, as well as the 50-day exponential moving average. The beauty of this bullish crossover between 9-day cutting from below the 50-day moving average is that this actually develops some short-term momentum. However, even the 20 and the 20-day moving average has also started moving upwards. So 9, 20 and 50 are moving up. The fourth long-term moving average that I use, that is not taken out as yet, and that is the 200-day moving average that will be taken care of. This is also forming a rounding bottom, which is actually a very regular bottom formation. It is gradually developing. The target becomes 1280 because it is a regular formation. With time, in most cases, I am not saying that all rounding bottom or saucer formations meet their target, but high probability is there for saucer formation to complete itself. Hence 1280 would be the final target. But prior to that, we would say that there has been a minor top when it started falling at 1155 on February 13. After that, the rounding bottom formation is very, very clear, and it is actually a saucer formation, a rounding bottom formation. That means selling is through, all supply has been absorbed, and finally the stock is moving up. The 14 RSI and the MACD, as you see on the chart, they are also showing positive divergence. That means while the prices went down, the momentum oscillators did not go and post a new low. Both the 14 RSI and the MACD did that. So that means there are real chances that it is going to go up. So buy ICICI General Insurance. Stop loss is 1094.80 on closing price basis. Immediate target is 1140. 1160 is the next target. 1168 and 1197. Duration is 3 to 6 months. But for 1 year, if you can have patience, then even 1280 is achievable for this kind of a formation. Thank you. Thank you for being with us. This stock recommendations are being given to you people. This is for the third week. I would very much like you to give me feedback. Write in YouTube. Bouquets and brickbats, both are welcome. Whatever is your opinion, please express. If you want to suggest something, do that. I would be very happy, and our effort will be great. We would get real impetus if you comment and help us. Thank you.